What's going on, guys? I figured I would do a video on what I call the free play. It's a really strong play when you're scalping, which, as most of you know, is what I do. And it is, this isn't something I didn't come up with. It's just a name I call something that you might already be familiar with, or call something different. It's not a, excuse me, it's not a breakthrough in science or anything like that. But I'll kind of explain what I look for in the steps that I take when I decide if I want to go for a free play on a ticker or not. Now the free play works best when the market is starting to have follow through. So I figured today is a really good day to kind of talk about it. Now that things seem to be, knock on wood, picking up a little bit of momentum. We saw a few tickers today with some good continued action. And I actually did a free play today on OCGN, which I have here in front of me, and LAZR yesterday. And I will talk about both of those. And hopefully by the end of this, you guys will have an understanding for, what I'm looking for when I'm looking for a quote-unquote free play. The free play has a really good upside with next to zero risk. Like, you literally can't lose money on it. However, you have to execute properly for the first couple of steps, and ideally you have to have a pretty strong entry. So yeah, let's go ahead and take a look. So I'm gonna just pull up Discord here. So at 8:59 a.m., which is my time, sorry, Central Time, that would be 9:59 market time. I'm going to be talking in Central Time simply because the timestamps down here on the bottom of my charts are going to be in Central Time. OCGN 7:14 to 7, I said, at 8:59, so that would be about back here. So price is at about 7:25 or so. So let's draw that zone out. 7 down to 7. Oh yeah, look at that. Pretty good. I want to match this with the things people saw as I mentioned them in Discord. That way there's some continuity there, and you guys can kind of have a better explanation. Okay, so essentially what had happened was, if you're not familiar with my previous videos about how I do my bids, this is a play where I did descending bids, and what that means is I do, in this instance, I believe I did 4 bids on this ticker. I believe it was somewhere like this, something like that. So I'll do, let's say, for the sake of explanation, that my max size is 1,000 shares based on my max risk and all that good stuff. I talk about that in another video if you want to go watch those. Anyways, let's say that hypothetically it's 1,000 shares is my max. So I'll set 100 up here at the top. About a quarter way through, I'll set 200, and then another 200, and then 500 for 1,000 total. And by having them increase in size as they descend, that means that my average will get lower as the price does, which is good until I'm in a full position. And typically when I'm in a full position doing that, I'm somewhere like right around here, 3 or 4 cents off of my bottom. Some plays I scale in a little differently depending on how big the zone is and how fast price is moving, things like that. But for this example, I did it like this, and I got tapped in with 3 or 4 of my I might have actually put it at 702 because I'm pretty sure I had a full position. No, I didn't. So I got tapped in with 3, and my cost basis was about 708, I think. Fuck. Anyhow, I got tapped in here, and I got tapped in, mostly in full, and price kind of broke out. Now this is where it's really important. So as it broke out, obviously I had a stop loss. My max my stop loss was actually going to be down here at 6.9, so I was risking 10 cents, which is pretty darn good stop loss. And I was holding for high of the run, which is going to be about right there. Yeah, perfect. So what we did is, we scaled in full. Price eventually came down. Remember, I called my zone out here, so there was a good chance that I was going to miss it, but it did break down, consolidated in my zone, and it took off. So as it started to do this, I tried my best. I was on my phone doing all this at the time. Tried my best to explain what I was doing as I was doing it, and I'm gonna scroll down so I tell you what okay. So, okay, my target was 7.4. Yeah. So as it broke out, it broke through here. Good sign of strength to pop out of this 20 here. You come look at the 5 and the 10, and you're talking about a damn near picture perfect recovery on both of these. This is essentially a tweezer bottom. It's pretty close, which is a good sign of reversal. Here you had an engulfing candle that came out of, or this is a bearish engulfing candle, and this one recovered half of it, which is usually a good sign, especially considering it broke VWAP and popped out of my zone in the process. So those two things gave me a lot of confidence, which is important moving forward. I talked about in my last video utilizing the different time frames in order to kind of corroborate my beliefs moving forward, not so that I believe in my move, because I have a stop loss and I have a profit target, so that's out of my hands at that point, but so that I can kind of assess what I want to do moving forward. So what I did is I hit my profit target, as you can see here, and I sold half. And in chat, I said, sold half OCGN. I will add to my winner at a 7.27 and raise stop to break even for a free trade and a chance at a new high. Now, what does that mean? So at 9.39, I said I'm selling half, so right at my profit target, I sold half. So I've already made half of a trade's worth of money right there. My profit target, boom, beautiful trade. And then I said at 7.27, I'm going to add, because I saw the 20 down here. And sure enough, wouldn't you know it, the size that I sold, my half a position that I sold, I then bought back at a discount. And then my average ends up raising, obviously somewhere close to here, a few cents upwards for sure. And I raise my stop loss to there. So I'm, worst case scenario, it comes down and it taps me out for 0. And the only thing I make on the trade is the first half that I sold already. And that's kind of where it's important to nail a really good entry, because in doing so, when you do add on the pullback after selling, you can't, if I add it up here and then I add it up here, boom, my cost basis is way up here. You know what I mean? Once I average these two together, having sold half and added to my winner, which brings my average up, you need to have a really clean entry so that your average doesn't shoot up like, 725, and then, you have a lot less wiggle room to get stopped out. Granted, it's a zero risk trade at that point, but the point remains, I will only do this if I feel like my entries are really solid, and that's why I said 7.27. I felt like that was a good place where my average would come out to probably about here. So I added back my size here, the size I sold off. Let's say that I was in 1,000 shares. I sold 500 here. I made $200 or whatever, $300, and then I added again 500 shares right here. And I raised my stop loss to break even. Let's assume it's the top of my zone. I don't remember what it was. But my stop loss is now there, right? So worst case scenario, it goes against me and I just take what I've already made. But it comes down here and boom, it comes back to my profit target again. So this time, as it consolidates over here, I sell again. So now I've sold 1,000 shares worth of a position. And I'm still in 500 shares because remember I added at the discount when it dipped. So I sold high, bought again as it got a little lower, and then sold once it reached the profit target again. So I've taken a full position ride from here to here, just like I said I was going to at the very beginning of the trade. But I now have 500 shares that as long as I raise my stop loss to that average, which will be, up here or whatever, as long as I raise my stop loss up there, I literally cannot lose money. I've already made an entire position's worth of, I can only gain. So let's say that, in this case and in yesterday, it didn't work out. I didn't make anything extra. I ended up stopping out. Yeah, right down here. But there's immense upside with absolutely zero risk. There's zero downside because, again, I've already taken 1,000 shares, an entire position's worth of profit at my target both times. So it wasn't like I was selling here and then selling here again. And it's like, oh, well, you would have just made more if you sold it all. No, I was intelligently seeing the strength, like I mentioned, on these corroborating signs on the higher time frames, seeing the price action, seeing the volume, taking out VWAP, taking out the 20, pop into the profit target. I sold half. I bought half back on the cheap, and I sold it again at the same profit target. So I've made, I've made an entire position's worth of money here. So now what I have the luxury of doing is raising my stop loss to where I lose no money. I can only win. And sometimes I'll raise it even higher, or let's say 7.3, because even if I get stopped out, that's above where I, bought back in. So I actually still make money. I make even more. But in this case, I actually had it down here. Now, doing that kind of depends on your risk. You can kind of move your stop if you think that it's kind of fading or whatever, because at this point you're in a trade that costs you nothing. It's completely free. It's literally a free money opportunity. And scalping is very, very strong because we've taken a 40-cent gain or 50-cent gain or whatever from here, and now we have 500 shares or half a position, whatever that might be based on your account, to potentially take it to high a day, another 40, 50 shares. Now, if I had loosened my stop up and actually, risked a little bit of capital by going back to my zone, I could have ridden it too high a day, but I don't sit in trades that long typically. I was okay taking my stop like a man because, the second that you start getting a little loose with your stop losses, I can afford a few cents here or whatever right here, is when you start getting loose with your rules, and I'm not about that. So unfortunately, it didn't work out, right? Unfortunately, it hit the stop loss, and those 500 shares, quote unquote, expired worthless. They made me nothing. They lost me nothing. So all I ended up with at the end of this trade was an entire trade's worth of profit, which is, obviously the goal with any trade. But what did I also have the opportunity to get? If I wanted to take another 10 cents, I could have. If I wanted to, sell down here, I could have, or raise my stop to where I was still making money, I could have. I have all these options with zero downside. Now, again, I can't stress enough that the entry is very important, because when you add, you don't want your cost basis to shoot up. So you have to have a really, really strong bottomed out entry, typically in the bottom of my zone, just like, the pullbacks. You guys know how I do my zones and whatnot. And, I had a chance to really bank, and it cost me nothing. And, that was a play I took today on OCGN, and I tried to, as I was doing it, explain it in chat so that, I try to, give some explanation, while you're seeing it live, because, it's one thing to, come here and explain it now as the chart's already finished for the day, and I can say, yeah, look how good it was. In hindsight, it's very easy to observe. But I in chat, you can go and look at the timestamps. I was calling it as I was doing it in hopes that it would kind of, give people some live examples as it's taking place, not so I could be like, look at me, dude, look at you calling my shots or whatever, just so that, people could have an opportunity for kind of understanding what my brain is telling me as the trade was being executed. Whether or not you were in the position, I have no idea. So, anyways, that's the free trade. That's the OCGN. Let's go look at the LAZR from yesterday. You might have to give me a second so that I can observe exactly where this was, because I don't remember. Oh, it was right here, actually, during the M. I remember that. So this is actually another situation. And one thing you're going to notice about the free trades is that when they take place, Oh, this is the wrong day, right? Yeah. When they take place, it's almost always around a 3-bar play. There's got to be some kind of pullback, obviously, because I don't want to take half profit and then add half profit at the exact same spot, right? Does that make sense? So there always has to be some kind of pop, draw back, and then pop again. So in this case, I explained this yesterday. If you didn't see, you can go look at the charts I posted in Discord. But I called out my zone. Let me see. I don't remember. I just need to know the initial zone. My Discord's not working. Whatever, screw it. I called out my initial zone. I want to say that it was like 1880 down to 18.9 down to 18.7. Yeah, I think that was it. Anyways, so I added, again, descending bids. I was in a full position here. I look over here at these time frames, and what do I see? So at the time, all I saw was this move, right? This is a pin bar, and it's a pin bar at the top of my zone with a long whip tap off of VWAP, meaning the dips were bought up, and that price closed very close to where it opened. That's usually a bullish sign. So the VWAP confirmation as well, really solid sign. Down here, we have essentially a tweezer bottom and an interruption away from VWAP. So just like on the OCGN play I was explaining, I had really strong corroboration on the 2 higher time frames. So over here, when I saw that we had broke above my profit target, which the first one was 19.2, and then the next one was 19.5. And my stop loss was actually right below VWAP at 50. So I was risking a max of 20 cents to make potentially 30 to 40, depending on what my average is, and then the higher stop loss to make 60, 70 cents, which is in scalping is really favorable odds. Anyways, I popped out. It hit my profit target. I sold. I literally said, if it drops to 1907, I'm getting back in. And it did exactly that, and I got filled at 1907. It was perfect. So I actually ended up selling slightly above my profit target because I sell on the ask, so I got filled somewhere up here. So I've, again, just like in the last play, I've sold half a position's worth of profit, and then I've added on a slight pullback. I've raised my stop loss to my average cost, so that if I do get stopped out, it's for $0. Now, because my entry was so solid down here, and then I added right here, that puts my average cost right about there. So beautiful execution on that, right? So worst case scenario, it falls off, boom, I'm tapped out. I make half a trade's worth of money. I lose nothing. It immediately comes back up to my profit target again. So I make another 15 cents and I sell. So now I've taken, just like on the last trade, an entire trade's worth of profit. An entire trade's worth of profit. And now I have a free play, a free 500 shares, a half a position, to do whatever I want with. So I raised my stop loss again after this popped and I sold, raised my stop loss. So now it's right about there. And I'm up here in this move, and it breaks my second profit target, goes to 1975, and I sell for an extra, nearly 40 cents, 50 cents almost in profit. On 500 shares, which is $250. So I made, for right here, let's assume it's 1,000 shares. That's $500. Plus, give me another $300 off of a single trade with $500 guaranteed, zero downside risk. And so it either made me $350 or $300 or whatever, or the downside was zero. I make zero. I lose zero. I make zero. And that's the power of the free play. Now, again, it has to have a very good entry, typically in markets where you're scalping and there's a lot of follow through. So as momentum starting to pick up, which is why I wanted to do this video now as things start to heat up, you have zero downside risk and significant upside. I mean, I typically like to do this when plays look like they could potentially go high of day, because it gives me a chance to ride that breakout. Because typically when breakouts take place, they pop a good bit. I saw some resistance here, not quite making it. So at 1975 or whatever, I took the rest of my profit, and I made a over $1 move, and 50 cents of that, 40 cents of that, or whatever, was with absolutely zero risk. So hopefully, that's an explanation that is helpful to you guys. I mean, if you have any questions, feel free to ask. Now, don't be looking for this in every play. Again, I had a really strong corroboration on my higher time frames. I'm comfortable with adding to winners. If you're not comfortable with that, then maybe all in, all out, or scale out, or do what you will with that. But if you are comfortable with that, or if you're paper trading or what have you, or maybe just add this to your repertoire if you're a good trader. If you're a trader and trading in your comfort zone, this is a really high upside play, zero downside risk, and I feel like we're going to probably be seeing a lot more of these as momentum starts to return. And this is a good way for scalpers. This is very important. This is a good way for scalpers in a hot market to take advantage of breakouts and things like that without being a breakout trader, without having a new strategy, without having to adjust. This is a good way for you to make money on extended moves, and it protects you entirely. I'm a scalper. I'm not a talented breakout trader like Rodessa or Maple or Trog or Bear or any of those guys. I'm a scalper. And, when markets heat up, I still have the opportunity to gain more without having to change styles or change strategies, or really even incorporate a whole lot of risk, because as I mentioned, when this works, it has zero downside and high potential upside. And on OCGN, you saw I was totally okay with explaining a play that it didn't work. I could have made extra money and I sold those shares at a bonus or whatever, but you can't look at what's unrealized and just say that that's mine now, because having unrealized profits come and go, that's part of the game, which is why I don't have my P&L on my screen. I play the chart, I play my ideas, and then I see how much money I make or win, or I make or lose at the end of the day. And more often than not, it's green, and there's a whole lot of stress taken out of the equation because of it. So that is the free play. Hopefully you guys liked it. Hopefully it helps. Again, if you have any questions, feel free to hit me up. My DMs are always open. Take care, guys, and have a great rest of your week.